question to you is, therefore, can this be one of the many cycles wherein, a demand-supply equilibrium will hold center stage? Or could this time the outcome be different simply because of something that we haven't seen for the last 15, 20 years?
Well, so this time around, there are several things which are very common to the kind of cycles that we have seen in the last 10 to 20 years. And then there are things which are starkly different from, the way things have played out in the last 10 to 20 years. And therefore, to that extent, it's different in that way. What is common, Neeraj, I think, is, of course, the market cycle itself. I mean, we have situations where markets, in a way, correct quite significantly, like we did in 2020. And then we tend to basically have a huge recovery because of central bank action, the liquidity which got kind of pumped in. And then the whole wave of technology and digitalization, which pretty much swept through the globe, which created new business models and new businesses, and therefore new valuation parameters and things of that kind, which in a way created its own excesses. And then, of course, that's got followed by maybe the start of a downturn. So to that extent, what is very common is that every 5 years or so, you have these cycles of a big up move followed by a downturn. What's very different around this time, essentially, is what probably a lot of people have started talking about is deglobalization, which means that countries and economies are thinking very insular. They have become more inward-looking. It's more about trying to essentially protect your turf rather than expand your horizons, which is very different from the world that we have seen in the last maybe 30 years, right from 1990 to 2020, ever since essentially the Berlin Wall fell off and all of that. And what is this doing? Deglobalization is in a way pretty much cramping liquidity. It's creating supply bottlenecks. It's basically in a way driving inflation, which is making central banks across the globe very, very hawkish. And so that's the thing, that it's not that for the first time we are seeing central banks being so hawkish. It's just that the reasons for that are very, very different. Now, while earlier this was more like a liquidity interest rate kind of a thing, this time, this liquidity curbs or interest rate hikes are driven by spike in inflation. You just keep in mind that for probably the last 20 years or so, the US has struggled to take its inflation rate above 2%. And I, in my lifetime, have never seen the inflation in the United States being higher than the inflation in India. It's like the headline inflation there is 8%, India is still 6.94, the headline numbers. Is something which I have never seen in my lifetime, in my entire career. So these are things which are starkly different and therefore are bound to have very, very different outcomes versus the kind of outcomes that we have seen in the last 10 to 20 years. And that's something which we probably need to start preparing for.
Are you saying that outcome is uncertain, or do you firmly believe that the recovery process will be long drawn and protracted? Also, like, could it last 9 to 12 months, 18 months and difficult to gauge? Or are you saying it's difficult to even say whether it will be a short-lived or long-lived recovery?
So if you look at Neeraj, there are two things. One is essentially market recovery, economic recovery.
Right.
I think the market recovery is going to take slightly more longer. So earlier on, economic recovery would take longer, but the market recovery would be faster. Okay. Maybe what could be different this time, and for which I would attach a relatively higher probability as an outcome, is that the economic recovery could be faster, especially I'm talking about India now, but the market recovery could take longer. So it's quite possible that for once, maybe the economy might be ahead of the market, or the markets could be lagging the economy. And Neeraj, probably this is something a bit akin to what we had seen in 2002, 2003, 2004, where essentially the economy had started to grow, but the markets, because of whatever happened, the 9/11, the US interest rates, etc., geopolitical issues, all of that, the market took way longer to recover. And therefore, we saw basically a huge bull market between 2004 and 2007 or 2008. Okay, while the economic recovery had started probably from 2001, 2002 in India. So that's probably a scenario which we may want to be prepared for.